I have to admit, the way I used to teach structure in this channel, I was wrong. It wasn't the complete package. And today I'm going to go through and show you the new fix to help you get more clarity in your trading. I'll first go through how I used to teach structure in this channel and the new way of looking at structure to give you that clarity when looking for your trades. So let's look at this pound US dollar pair. I just want to briefly show you the way I would look at marking up these structures. Simple, easy way. So let's say we see this as a area of breakout. This becomes my current low in the market. We have price breaking out again, a new higher low, a new high. We break out structure again, a new higher low, and a new high with a new higher low as price continues to break structure. Then I'd see price running all the way down here, creating this low with a new lower high, a new low, and then eventually you can see price breaks this structure to the upside. We break again and we continue to break. And this is where I would be looking at my structures. Now, there's nothing wrong with the way we look at structures in this way, but the way we've now fixed this structure issue and fine-tuned it, you'll be able to see how you'll use multiple time frames for more clarity when using your structure. If you already know structure, but trades like this still go wrong, the workshop shows you why. That's where Jake stopped second guessing and started getting in clean. It's £49 and it's where things finally clicked. Just hit the link below to join. Now I've used an area of price here just to show you that even though this was wrong, it still would have worked and it does look very good. Especially here, we get a great pull back into an area of demand for continuation. Now, I'm not saying that if you're using this right now, it's going to be number one reason why you're losing in the markets, because many times it is emotional based, not just the actual structure system you are applying. So let's look at another area of price. Let's remove all this and we'll look at another area of price. Let's just go forward. Okay, so we've got current price in the market. Let's just look at this current area of price in the market and we'll look at this move up right now. And we'll look at using exactly the new structure approach and how we look at the old structure here at the same time. Now, sometimes you're going to find that the new structure approach is going to be very much the same as the old way, but slight differences at certain times where it's going to give you that edge in the market when looking for a trade. And I will go through showing you at the end of this video a couple of trades I'm in on this pair on a 5-minute entry following these structures. So you can see how you can use this to actually find great trades as well. So if we're looking at this here, I'm just going to go through marking up this area of price to show you how easy this is. Now, the old way we mark up structure, let's just do that first. I'll be looking at this as a potential break to downside. And what I'm going to do is mark these out as a dashed line. So you can just see the difference as we go through in a moment, marking up the two types of structure. And let's just make it thicker so you can identify which one this is. So this is the old way I used to mark it. This would then become my high, where we see a break to the upside. And this will become my low of my structure. The market continues to push up. We create this pullback coming into these areas of imbalance. And then we break structure here to the upside again. Okay, you're going to find some of this with the new style. It's going to be the same area, but just follow as I do this and you'll see. So again, another breakout and price pulls back. We create another breakout. So currently I'm looking at price. We have a high here and we'd have a low here. Now, like I said, this structure-based approach is very simple. You're just visually looking at the chart, marking out your levels, and that is where you're going wrong if you're still following what I was teaching. I admit I potentially was teaching you wrong, but now I'm giving you that fix, that clarity to help you to identify why this new approach is going to work better for you. Now, understanding that this is just an area we're looking at price, this one move, let me just mark it out with an arrow here so we can see this is the area we're looking at price. Break the upside. And we're marking off the highest points each time. So what I mean is we're marking off the high, the newer high, the new high, the new high, and the higher lows are the lowest points as well. Using the new approach, we look at this in a slightly different way. And I will go through a different area of price as well so you can actually see the difference in more detail. But I want to show you current price to show you how we mark this up. So now I'm going to go from this area again and we're going to zoom into the chart And I'll walk through this step to step with this method. Now, don't worry if you're not sure as we're going through, so we'll go through step by step to show you exactly how we do this. Now, it's understanding a candle approach. It's very, very mechanical. Now, when I say mechanical, I mean, if you all learn this, you will all mark your structures exactly the same way. Now, as long as you're looking at the same broker, they will always be the same. Obviously, some broker feeds will be different, which will give you different candles. But if you're using the same approach, and let me just give you a suggestion here, is that I use Forex.com when I actually look at marking my charts. Yes, I'm on IC markets here. Potentially I could use this for taking my entries, but I'll always use Forex.com when I'm marking up my charts for areas to look for trades. So if we look at this move to the upside, from this point, I have a move down here. Now, I'm going to show you that this, in fact, is the same breaker structure. We have a move down, and this would be the same breaker structure across. So there's no change here whatsoever. So let me just, as we know this is a previous era, we'll mark this off as a daily breaker structure. So this is the same breaker structure I would use. But when it comes to marking off my high, when I saw this candle breaking down, this is where the strategy is going to change for you. Let's just remove this arrow for now. When we see the bearish candle closing through, and that's what we need to see, we cannot see a breaker structure just with a wick like this. Again, this is another area where I've looked at changing the way we use structure to give you more clarity and more mechanical. When we see a wick through, that is nothing but a liquidity grab. That's why we see a boost to the upside with buyers, because they're bringing in buyers here thinking it was a breaker structure. So that's selling on the break, getting caught in a trap, and then we're running higher. Now, when we see this valid close to downside, this gives me a valid break of structure. Now what we can look for is a high to be created. I'm going to mark it off with a level. So this is a level I'm going to mark, and the reason this is a valid high before the break, we're not using this high up here now for break, is because I'm looking for a candle basis. And I'm going to remove this arrow now. But this one I've moved here, when you see this candle closing above this previous candle's high, then we make the high and then we run to downside. That is how we look for a high now. So this becomes what we class as a valid daily high, and it's a strong high in the market. So we've pushed to downside, we've made this pullback. Now, if you was looking at this high, and let's say if you do use supply and demand, okay, it's like I teach inside the 90-day program and the workshop, you'd have an area, let's say, of potential supply up here. Notice we do test the supply on this first dropout pullback continuation, but after that, we don't come up to that supply until we reverse through this level here. And that's the key point to make, is that using the old structure, which I used to teach, which is wrong, that gives you more clarity when you're understanding this new structure technique. Because now we can identify that this is our breakout area, this point here. Where does price break out and pull straight back into before we run lower again? Comes into this area where we've marked this high. And this is why it's so much clarity on looking for your trades, because now you understand this is an area of supply where you go down to lower time frames using multiple time frames looking for your entries. So understanding your structure here is key. Once we see a breakout, you're just looking back for the last time we see that candle closing up. And this is the candle that closes up. And as we go through marking the structure, it will become more clear for you. So again, when we see a close up for a valid high on the break to downside, this is when we're only looking for a bearish price action. When we're looking at bullish price action, you will see this will change. But we can mark off our new low in the market once we see the same thing, a close above a previous candle. So we see that, we can mark this off as our low. So now what you'll be doing is looking for your trade, and let me just mark this off as a valid low so you can see this. A weak low in the market. When I see price pulling back in here into my area of supply on a daily, I'm looking at a lower time frame entry. I can see there's a sweep here on a daily candle, so there's going to be a sweep of liquidity on lower time frame, and that's where I can capture my trade to run for this weak low on a daily. Short-term trade, But on a lower time frame, like a 5-minute entry, you're looking at a higher risk to reward there. So that's how we can potentially look at this. Now, if we go forward from here, when we see again a new break to downside with this candle, that's what we're looking for, is you're looking back again for that close up. There's the close up, and we would move the high to here. And again, it remains our strong high. As price pushes down, now we've got this low currently marked. When we see this close up, that's where we have this low marked. So once we've seen that close up, that's our valid low. This becomes a new break of structure. And I'll mark all this out as we go so you can see this. And if you're unsure of anything, just watch this video again. It doesn't hurt to watch it. And if you have actually been using the old way I used to teach the structure in this channel, then let me know that you've been using that. And if you are still using it and it's working for you, that's great. I'd like to hear that from you as well. And you can just drop that down below in a comment. So when we do see price here pulling back, we come back into what again? Well, simply here, we have another era of potential supply. Price is pulling back into. You can see price comes up higher, higher low, and then breaks it. Okay, so it's reading price here on a lower time frame basis what's happening. Short term, there may have been a sell here to downside, but potentially this is now bullish on a lower time frame. So now we have our trading range, and that's what this gives you with this structure clarity. It gives you a trading range. Before it didn't give you that clarity it gives you now. So as soon as we see a break of structure, and again, that is valid by that bullish candle there. Now, if you're seeing I've got some multicolored candles on this chart, don't worry. All this is showing me is still a bullish candle and a bearish candle, but it gives me an indication where I can see areas of imbalance. I'm not going to go into that in this video because it will complicate things. This is about structure. This is what the channel is all about, bringing you clarity, a foundation to work with your structures. Now we see this breakout, that's a shift in structure. But before I'm going to move this level, we look back from here, and now what we're looking for is our last close down, not a close up this time. And in fact, this is our last close down below this low. Okay, we even closed down on that candle as well if we didn't have this close down. What we can now do is we can mark this low as our lowest point, and this now becomes what we class as a strong low in the market because we've broken to the upside. Our structure is now bullish. And again, you can see how we've now already shifted bullish at this point. And we wasn't looking at this based on our old structure. So now we have a break of structure here to the upside. Now, while we're going through this, I'm going to be fully transparent here with you. There is no mechanical strategy that is going to be 100% accurate all the time. But it gives you an edge in the market and more clarity when you understand that you have a mechanical approach. Now, if you apply a mechanical entry method as well as your structure, that's when everything becomes much less emotional for you when you're taking the trade. So when we see this, we're looking now again for a close down, for a high to form. And I believe this may have just happened here. Let's have a look. We have a low, 250, and we have a close of 244. Yeah, so this closes down. That makes this a valid high. And again, I will just talk you through what happens here. We have a weak high here in the market. Strong low, we're expecting continuation. We had a break of structure. What happens here is the market just sweeps above this high. And then we go lower to sweep these lows here. That's all about understanding liquidity. And again, this is something that I teach inside that 90-day. But when you understand liquidity, and understand what's happening with these sweeps, what this is a trap to bring in breakout buyers, pushing the market lower to take their stops out, to then sweep these lows where more stops sit, where people have bought the market, to then finally give you that true run. Those three big candles is where the banks, institutions, that's where they want to run the market, not these small little wicks to the upside. That is where they're trapping you into those trades. Now, once we see this sweep and we see a push and we see another break of structure, okay, this time this candle is a valid break of structure. What do we look for? We look for that last close down again. So this is our last candle that closes down below the previous candle. So now what we can do is move our low to this low, and this gives our new strong low in the market. This becomes our new break of structure. because now we've got a valid breakout. Now look how I didn't move my high this time. I didn't mark it off this high. That's because we're using this mechanical approach. We want to see these sweeps. We don't want to be marking off this high now. We leave it this high so we can see where those sweeps occur. So again, we're looking for the same thing, same sequence up here. We're looking for that down close candle. That doesn't happen until here. We don't close down here. We don't close down here. We do nothing at this point. We're waiting. Now we see the close down. We can mark this off as our weak high. Our low remains here. And you can see in this move to the upside, we actually move sideways. We make this high and then we break structure. Now before, we were looking only as this as a high for a breakout. Okay, we still look at this as a high for a breakout in a moment, you'll see. But what's happening here, there's a small trap playing out for a deeper pullback. Now, looking at a higher time frame, like a weekly, this may become more clear what was happening, or even a 4-hour time frame. But right now, let's mark this out as a new break of structure. Again, like I said earlier, I'll give you full transparency that not everything is always going to be perfect every time. And that's exactly what you're seeing here. This is just bringing you into a buy scenario. When you see this close down, this becomes your weak high again. And as we see this breakout with this bullish candle, I'll mark it off for you. There is our last close down. Just closes down. This becomes your new current low. Now we have one candle that drops all the way down that daily time frame. So most probably, understanding your multiple time frame here, there would not even been a trade. There may have been a trade of sweeping the low, potentially. We see this pullback, but time of day for me, there wouldn't have been, because this would have probably happened in an Asian session. I'm not just saying that to say there wouldn't have been a losing trade. There could have been a losing trade here. But this is showing me now that structure shifted back bearish. And this is where things can become a bit confusing if you're not reading price correctly with multiple time frame. But this is showing me a break of structure. Now, a valid break of structure does not occur until the close of this candle. And once we see this candle closing bullish, that becomes, and I'll have to just change this quickly for you. That now becomes your weak low, and this would actually be your strong high, because we've shifted bearish here with structure. Price pulls back, and yes, this is somewhere we're looking for a sell now, thinking price is going to go bearish. And again, like I said, this is where this time this structure hasn't given us that full clarity, because of the fact that this is where our previous break of structure would have been, where we saw this move up, a pullback to go long. But again, we use multiple time frames to diagnose what's going on, not just the one time frame here. So now we see this is a new break of structure. So we'll convert this now to a break of structure again. And this is where it's giving you the directional bias again bullish. And we're looking for that close down. And I can mark this off now as a weak high again. This becomes our strong low, as we see that break to the upside. And there's that close down. Let me just mark it off. There's the close down that we're looking for on that candle. Remember, using this approach when we're bullish, we look for a close down below the previous candle's low to give us a valid high and for a valid low. So again, for this low to be marked, when we saw this breakout, this is our close down, valid low to be marked. This is why it's so mechanical, this structure strategy. Now, straight away here, this is unfortunately where we're going to find sometimes you can get whipped around. But we're looking at multiple time frames. We get a new break of structure to the upside here. A quick pullback, a break of structure, and I'm just going to mark it off a new break bearish again. So there's another occasion where price has reversed structure again. Now, all what's happening here is that we're pushing into these imbalances here. That's why we don't just use structure alone. Yes, structure is your foundation, but then we add on levels above structure like supply and demand, imbalances and liquidity to fine tune when you're looking for a trade. And obviously using multiple time frames for your structure. So this becomes a new break head to the upside. Now straight away, this becomes another break of structure bullish. And we may have lost some trades here. I'm not saying you haven't. And again, like I said, there's no winning 100% strategy out there. But using the structure in this way with multiple time frames and layer on everything else on top will give you more clarity than just using a simple visual structure, because now you know it's mechanical. Now you know that you're not marking it wrong. You're marking it exactly as it should be. Now when we break to the upside here again, we look back, last close down is this candle. So we can drag this over to here. Now obviously it was here, the strong low, then it became this high here. Let me just actually change that. I've marked that out wrong. This would be the high. Okay, so when we see the break to downside in this candle, we look back to the last close up because we've shifted structure. That's our current high. So when price comes back here and we close through with this candle, this small bullish candle, then we look back and this becomes your strong low again. As price moves up, we see this candle closing down, we go a weak high. Now I'm going to go through this a bit quicker now so you can see how price moves. So again, this becomes a new break of structure on this close up. So mark this off. This is our valid break of structure. Once you see that break up, this then becomes, grab it, a valid low. So what happens is, now this becomes your valid high, and we have a shift out. Now, the reason why this was happening is we're inside a higher time frame supply, or coming towards a higher time frame supply. I believe now we're inside a higher time frame supply of the monthly. This was coming towards it. So when price comes up to higher time frame areas like this, we can find choppy price action. And it's waiting for that key reversal, which is key. So at this point, now we start to see a reversal. And again, I'm not just saying this to say to you, this is why this trade could potentially lost. I will show you this in a moment, exactly where that higher time frame sits. Now we have this level. We'll mark out as a new break of structure to the upside. Okay, there's the old one. This is our current low, and again, this would be valid because this is where we see the breakout. There's our last close down, our lowest point. That's our strong low, and this becomes our strong high, because we have a close down here. So that's all valid now. And if we just come out now, you can see where we have the new structure marking out. So before we mark out with this level, we have price coming from this area, pulling back. We break out here, and you can start to see where price is shifting with that structure. Up here, then we drop down. So you're actually seeing price shift much faster. Okay, so you're seeing every single movement by using a candle-to-candle approach. Now, not every movement here is going to be a structure you're going to trade in that direction. Some of these structure breaks, like this push down, is coming into origin areas down here. So when we have this structure reversing, we still have our demand down here prices coming into where we can still look for potential buys, understanding what is happening with the market. Now, what I did say to you, which we'll go through, is that on a higher time frame here, we're now coming into the area of supply. So let me just show you where that area is. So I'm on the monthly time frame, and what we've got here is the monthly broke structure to the downside, and we have like this area of supply, which is our last buy to sell move. We retested it, which tells me that the market would want to run this high, which you can see we've now just done. Now, if I just mark all this to the lower time frame, and we go back to daily, where I was just showing you what was happening, and I said to you about how this is bringing in sellers too early, and that's what it's doing. And the reason is bringing them in before it comes into this area of supply on a monthly. Now we're pushing into that supply, and more importantly, taking liquidity above this level. See how we never got to that level? And this was just a sweep of a low. So this is just sweeping through this low to then push the market higher. Now it's understanding, like I said, not just structure, it's everything together. But unless you have the foundation, the clarity of learning this structure I'm teaching, you're not going to understand this fully. That's why I was teaching it wrong. That's why this new fix is going to help you going forward. Now, before we leave, let's have a look at the 5-minute entries I caught this past week. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description and apply for early access to the 90-day profit trading system today. So here we are on the 5-minute time frame, just to show you the types of trades that you can catch when you start using this structure with multiple time frames. I'm not going to go into the full procedure of the trade. You can see there's a trade called here this morning, understanding this structure. We're already gone past the previous low, continue to fall, and we're looking for price to head to this low down here for a total of just over a 4-hour trade. Now, that's not a bad looking trade. This trade is now risk free, but we also have another trade previously where I see price shifting out, and this is using multiple time frames, and this is where I share these trades inside the 90-day program community. This is a trade caught and price was taking some profit around these lows because it's before the weekend, and we're running for a week low down here just over, I think it's just under 24 hour based on the forex.com charts. And that's how you can start applying these methods when you get clarity with this type of structure. Now, if you want to understand a bit more depth by using a 2 time frame approach, I do suggest watching this video coming up next. It's going to help you to understand how we apply 2 time frames using this type of structure.